Hello everyone, this is Alberto. I will be with you with the global economic outlook in the week ahead, which is going to be the Victory 9 of 2025. As always, let's first check what we had previous week, and then we can go forward and check the week ahead. Last week, it was the central bank's week where we saw interest rate decisions meetings in United Kingdom, United States, in Canada, and also in Japan. In Japan and United Kingdom, we didn't see any interest rate change as it was expected, but still we had a surprise in United Kingdom. 8-1 expected vote for for holding the current rate changed to 7-2 votes for holding the rates. That was the reason where the market were like kind of read that decision as a somehow slightly dovish decision. In Japan, while the central bank or PBoC held the interest rate unchanged, but they started to selling the massive amount of their stocks which they bought during the pandemic to support the stock markets. Also, they started selling the bonds and other securities that they had already. So that can be read as a hawkish decision in Japan. In Canada, as market expected, with the slower interest inflation and while the economic growth also slowing down, the central bank held the interest rate at cut the interest rate by 25 basis points to 2.5%. In United Kingdom, we talked already too much about that during the week. We had several videos about that. We mentioned that this decision was the most massive decision in a decade that we had in United Kingdom, in United States, sorry, with too many I mean, on how I can say the numbers and expectations that they couldn't match each other while the central bank expecting in lower unemployment rate, while they're expecting higher inflation, while they're expecting better economic growth, they're also expecting more rates cut. That's something that they cannot match to each other. That was the reason that we said we can. I do actually believe that we can call it the most massive central bank meeting that we had in the United States in past 10 years. In a week ahead, again, the week also actually ended with the President Trump phone talk actually with the Xi Jinping, where they talked about the TikTok. Finally, they made a decision. Decision is somehow is not clear actually especially for users, where they decided probably we're going to have new platform in United States where the U.S. Citizens or U.S. connectors, they're going to connect to that platform. Probably they're going to move all the users from the previous platform to the new platform. That will be automatically, or that will be expected. I mean, that the U.S. Users to go by themselves or not. I don't know I mean, it's not still clear. Also, we don't know if they move from older version to the new US version for the US citizens. Actually, will they move all their videos, their views? They will be able to carry their followers or things like that? I mean, these things are still not clear. We don't know anything about them. We just know that the Oracle probably gonna own this platform, the new platform. Actually, that's gonna be the consortium of the different companies with the leadership of the Oracle, which probably will have the 40% of this ownership. That can be the good news for Oracle. That can be something good for, especially if they want to test their new AI stuff. So for them, going to be the like bigger community that they can test what they want with the real users. But how they can affect I mean, for the clients, all the clients and their accounts, still not clear. That decision and that phone talk actually helped the stock market to slightly increase again on Friday before market close. But for the week ahead, we will talk about that, what we're expecting. Week ahead again, we're going to have the central banks meeting in China, Mexico, and Switzerland. Very special in Switzerland, we expect to see the rates hike to be unchanged at 0% on Thursday. In Mexico also, we are not expecting any rate hike or rate cuts, but in China, thing is that the Chinese economy right now in the current situation, it really needs support. While we expect to see no rate hike or no rate cut in China and holding the 1-year loan prime rate at 3% and 5 years loan prime rate at 3.5%, we should expect some supportive plans or stimulus from the central bank and the government. As you know, last week we talked about that. Chinese economic data which published showed that the industrial production, manufacturing production, and even the fixed asset investment, all of them, they increased much less than market expected. While even the house price index, which improved slightly, still from the minus 3.4%, improved to minus 2.5%. That still, again, means that the activities in the housing market, in construction market, is not still acceptable and is falling. So generally, this data means that the Chinese economy need more support. So that's why we are expecting to see some changes in the policies, even if the interest rate is not going to be changed. We should wait and see what's going to happen and what they are going to decide. In United States, but it will be very important week, especially on Friday, where we're going to have the core PC price index, the consumer income and spending. We expect to see the personal spending to increase by 0.5%, again repeating the same number that we had previous month in September. Personal income, but should be slightly eased to 0.3% from previous 0.4%, but still they're fine. I mean, even if they have these numbers, they were not going to be such a bad numbers. Consumer or PC price index and core PC price index, both they are expected to increase by 0.2% monthly and held at 2.9 and 2.6% respectively for core PC price index and PC price index. That will be very important meeting and very important data, which can give us the next market direction for the stocks and especially for the dollar index. But on Thursday, again, we're going to have another important data, which is the durable goods orders, where we expect to see the headline or orders to fall by 0.4% after previous month, which fell by 2.8%. Excluding transportation, durable goods orders should fall again by 0.1%. That's while the previous month it increased by 1.1%, which was one of the surprises that we had previous months. Home sales on Thursday, we're going to have the existing home sales numbers. With the slower inflation, with the slower interest rate, probably the new existing home sales will increase slightly. But in United States, what is very important is the speeches, as you know, that after the Fed meeting this week, these speakers will give us more data about what happened in previous week in the meeting and what the central bank decided. So the Fed speakers will be very, very, very important to watch. Don't forget to follow them more closely. Other data that during the week will be very important will be the PMI numbers. We're going to have the PMI numbers, service and manufacturing PMIs from most developed and developing economies. Very beginning, understand what's exactly going on. I mean, not that exactly, we can have a better idea on what's going on in the economies, especially on manufacturing sector. We're expecting to see slightly better numbers, and generally for both manufacturing and service sector, these during the week, we are expecting to see slightly improvement, especially in Europe and United States. Same for United Kingdom as well. These numbers will be very important for the energy market, better than expected. Economic activities can support the energy and oil prices. We know that in the previous 2 weeks ago, where we had OPEC, EIA, and IEA reports, between EIA and IEA, we had somehow just like they had some similar view, but OPEC had a different view on the economic growth, demand, and supply. OPEC still expecting a higher prices for the oil and energy, while the EIA and IEA, they're expecting around $51 for WTI prices. So yeah, those are the most important events during the week. Another important on Friday, again, we will have the Tokyo inflation numbers. It's not a whole Japanese inflation, but the Tokyo is very important to watch, where we expect to see after 2 months of slowing inflation, again in the Tokyo inflation to slightly increase to 2.8% from previous 2.5% on the annual scale. That can increase the demand of rate hike. However, the previous week's decision of selling the securities can support this idea of, okay, even if not central bank, even if they didn't hike the rates, at least they had some changes in policies. Yeah, in Switzerland, we told that inflation in interest rates supposed to stay unchanged at 0%. Yeah, that's the most important data we are expecting to see from the previous week. Don't forget to watch this code numbers. I want to talk about the stock markets before going there. I will mention about the code reports that we had on Friday. The data which we have, it shows that the net buy position increased for the gold, but for the stock markets, as you can see here, S&P 500, Nasdaq, and Dow Jones, all of them, they are falling. So the interest in the buy positions in the stock market is falling. Why it's important? Let's go to the chart and see the chart. For the traders and investors that they are more seriously, the traders and investors which watching the market, taking with more carefully and with more deeper data, economic deeper data, following the coach reports will be very, very, very important. Don't forget to watch and follow them. As you can see here, the market risk after Fed meeting, which supposed to fall slightly eased. As you can see, the before Fed meeting, it increased so high. After Fed meeting, we were expecting to see slower, slightly weaker and lower risk in the market, but it didn't slow down too much. And now the VIX moving about 17.66, which is very high comparing with the 15, the normal number. That says that the market uncertainty and the risk still there and high. That's why we can see the dollar index, gold price, and stock prices, all of them, they are moving higher altogether. That's one of the surprises that we had last week. Dollar index depend on considering the current situation and the decisions that we had in the Fed and their expectations for interest rates, their expectations for economic growth, their expectation for labor markets. All of them, they give a mixed idea of what is going on in the markets. Doesn't know what exactly the Fed is talking about. That was the reaction. Dollar increased even while the market talking about the more rate. The Federal Reserve talking about the more rate cut, but the dollar index increased again above 97 mark. Now we can see it at 97.3. We expect to see the dollar index during the week between 97 and 8, while for the gold, fundamentally and technically, everything they are supporting from the for higher prices. Central banks also, they are increased their target for 2025. However, technically, we can see that with the increasing the prices, RSI is slowing down from the overbought area, which means that there is opportunity of technical correction before next move. Be careful about that, but it's not the sign of changing the market direction yet. On the energy markets, geopolitical tensions, especially what's going on between Russia and Ukraine. Today, again, we had another massive attack to Kiev and other cities in Ukraine from Russians. That increased the market risk and uncertainty, especially for the energy market. Tensions between the U.S. and Iran also is increasing. Islamic Republic in Iran, it's also increasing, which can have the positive effect on the oil prices. Generally, if the Iranians oil, they can cut the Iranians oil from the market. It's around about 2 million barrels a day. If they can cut the Iranian oils from the market, that can increase the oil prices in the market slightly. However, don't forget that the previous week's recounts shows that the more recounts in the United States increasing from 414 to 418, if not mistaken, and also generally that's also after we can see this number increasing for the last 3 weeks, repeating by more than two numbers they're increasing in the last 3 weeks. So that's why even we will have the more production, but still the Iranian oil can affect the market if they can cut that In next 10 days, we're going to see and what's going on there, exactly what will happen. But for now, we can say that the markets, energy and especially the oil market, will depend mostly on geopolitical tensions than compared with the economic conditions. Stock markets, as mentioned, with the uncertainty in the market, they are not a good price. They are not a good sign for the stock markets. The last few hours increasing in the stock markets, mostly it was because of the positive news around the Chinese and US presidents talking, the phone talk and phone negotiation. That supported slightly the market, but with the overall condition in the market, we are not too much. I mean, we cannot be too much positive about the stock prices. There are too many bugs in the markets. There are too many questions in the market. We should be we should be so careful about them. Same thing for the Nasdaq and the Dow Jones as well, especially for the Nasdaq. On the cryptocurrency market, usually in the last days, the crypto gain following the stock market prices. However, if what we talked about the stock market, let's say in this way, looking at the overall macroeconomic data, and the macroeconomic data, if we look at that from that position, if the stock markets fall sharply, Bitcoin price also can fall sharply. But if the stock market slightly decrease the prices, and these numbers that we talk about, the effect negative on the stock markets, probably some of this money is going out from the stock market can go towards gold and also at the same time the cryptocurrency market. And in that case, that can be positive for the Bitcoin. In other cryptos, especially the Bitcoin. On the technical front, 50 period moving average and 100 moving average, and at 111,000 and 109,000 around them. There are the first and the second main supports. As long as the price moving above 109,000 is positive, and we can still count on the boost. But for now, we have slightly uncertainty in the market. Same we have in other markets. Yeah, that was what happened previous week and what we're expecting for the week ahead. Make sure to check the data, especially the macroeconomic data, before opening or closing any position. Have a good time. Bye-bye.